Who here trades with zero take profits?
I'm beginning to do that.
I definitely do.
Okay. Because that's kind of what the challenge I want to give you guys right now is to trade with a zero take profit. Because obviously we've hit our goal for the day. So I want to have you guys trade with the zero take profit as a goal. And while you guys are doing that, so your goal is to trade with a zero take profit, but get out at action points. So let's identify where our action points are on the one. So if you're into sells right now, your action point's going to be here, going to be here, going to be, well, the body, not the wick, the body and here on sells. But if you're looking to build your buys, your action point here on a buy and right here on a buy, right? If it comes down even further and you get into and you build into some more buys, if it comes down further and you get into some more buys, then your action point could be here if it comes down past that point, right? Back up. So what I mean, and the action points is you need to make the decision. The action point that you need to do is make the decision. And today, since we have a little bit of time, I'm going to let Patricio do this. Patricio, you're going to share your screen. You're going to trade with a zero take profit, and you're going to talk us through what you're looking at, what you're assessing, where you think the action points are, and teach us how to trade with a zero take profit. Are you okay with that?
I'm okay with that. Just, give me 1 second. I need to go into Zoom on the trading computer. Wait.
I thought he was going to give me 1 second. He like bounces.
So the idea is to trade with zero take profit and make money?
Well, yes, but focus on the action points. Okay.
Okay.
When you're ready, we'll flip over and then and you start doing it. But I'm going to explain what the action points are for those who don't know. Action points are basically areas like I just identified. They're decision points. Now, I don't call them decision points. If you're in the Wobble Bootcamp, that's what they're calling them because that's what Sean calls them. I call them action points just to differentiate because I don't want you to make a decision. I want you to react to the market. I want you to take action, right? And the action that you're going to take whenever it hits an action point, these are your three actions. You're either going to take a trade, you're going to place a trade there, you're going to get out, or you're going to wait. Those are your three actions. So depending on what the candle does, you're either going to enter, exit, or wait. So right here on that action point would have been a good place to wait if you had buys on because it did not stall. So you would wait and you'd sit on your hands. Now this action point is stalling. This is where you would either get out if you had trades on, right? Now, the goal here is to get out because guess what? If you didn't get out because you're like, oh, it could break and I could gobble up all this profit and it didn't break, sometimes it pulls all the way back down and goes this way and you just lost your opportunity and you lose money. And that's the disadvantage of trading with zero take profits. Because if you had a take profit right here, it would have hit and it would have made your decision for you. But if you don't have a take profit and you flip into the mindset of, oh, I want to let it break, and then it just doesn't because it's a great bounce point and you lose on that layer, that's the wrong way to trade zero take profits. So Patricia, whenever you're ready, let me know.
Yeah.
Let me know.
Yeah, whenever I switch to the, there you are. When I switch to the Mac, to the page 3, I start fighting this thing. So, okay, share screen right there.
Yeah, I probably have to stop sharing.
Okay, let me get it.
See you, Josh. Thanks for joining us. Since we got to mute one of you. You got two Patricias. Well, I'm seeing double. It's too early for me to be seeing double.
So are you watching my screen now?
Yes. And then we get to pick the best view of Patricio.
Wait. Okay.
I apologize. We're not seeing your screen.
You are or you're not?
Point there.
We are not seeing your screen.
Okay, how about now?
Something's going on. Yep, got it now.
Okay, so like you said, we are at
Yeah, I don't think I would be trading 20 lots.
definitely. So when we're looking at it, it hit this that you were talking about. So I will be looking to see if it crosses with the body here. And I would need a confirmation candle just to be sure that I can, it's going to go long again. Now it's been a huge candle over here, no retracement. That tells me it could bounce any minute. And I need to be aware of that. Let me see if I can do this here a second.
So the goal here, guys, is to, I think the challenge, once you complete your challenge, is to trade with 0 take profits and be able to turn a wobble into a ride the wave. That's the challenge. Now we're not going to be able to do that unless the market gives us that. So we're going to have 2 challenges. One, trade with the action point, get out on the stalls, but then also be able to identify when you can turn a wobble into a ride the wave, right? Because I think that that's a very critical step in your guys' evolution of learning when to wobble and when not to wobble. The only thing I would say to that buy is that's not a good place to buy.
Right. I mean, so it crossed this here with the body.
No, I get it, but I would have waited for a blue candle to buy.
Right. I agree. I agree. That's, I mean, I've been fighting that because I get like eager. That guy took that little tiny trade
because I thought I was going to break out, but I didn't get in. Like I said, I took the bus route on the ride up instead of the Ferrari route because it didn't ever give me that pullback. So I got in because I'm like, I need to just be in so that I can be in the market. So I got in super light and then it popped that I was hoping for that little pullback. So it's better in my estimation, just to kind of tell you, it's better to wait, then get in. And if you miss the opportunity, then you miss the opportunity. There's always a better opportunity, right? Because I would rather wait to get in, miss the opportunity, than get in here and have it turn on me. Does that make sense? Because it's so much harder to fix this layer of trades than it is to fix this layer of trades. It really is, even though they're like really close together. It's just, if this is on an action point, that's the best place to get in. So I've kind of already predetermined for my trading that if it doesn't give it to me, then I'm missing the opportunity. I got to be okay with missing that opportunity. Right. And then what happens is that I usually like right now, I would sort of like measure from here to here. Right. Exactly. Because that's your next action point. Right. So we have like 10 pips to go. And I'm like, oh my God, I'm going to miss on 10 pips. That's terrible. And then I get eager and then I'm waiting for a pullback and then it's never going to come. So yeah. So we do have kind of the volume is shrinking out of the market. So traders are starting to leave. So I wouldn't think that it's going to go from here to here in like fast, like it's gone from here to here. Does that make sense? Right. Because so if it does decide to do that, it's probably going to be wobbling all the way up or all the way up to that point. Does that make sense? So we don't have any action points in here to here. So this is where you got to kind of start creating your own. So this is where I would get out of this trade. Where? Well, when I would get out, or the action point that I would get out is when kind of a little bit of a ride the wave situation, but it's not really giving you like a huge. So the next time the blue, so I don't know, are you even making money right now? So next time the next time the blue candle closes below a green candle, that's a good indication for a reversal point. Does that make sense?
Right.
And so, but unfortunately, you also have to be able to make money. And if this candle turned blue under here, I'm not sure you'd be making money. Can you double click on the price on the 1 hour or the 1 minute chart? Excuse me. Double click on the price right there. Double click it in there. There we go. It just helps me to see your view be the same as my view. Does that make sense?
Oh.
Then I can know what the size of the candles are. It's kind of hard to know, kind of hard to read price when you don't know the size of the candles. All right. So now you are officially in a ride the wave situation, meaning that if this comes down 50%, I'd get out of that. I wouldn't necessarily, that's not your stop loss. Okay. I'm like, if it comes down 50%, I get out. But then if it keeps going up, the next blue candle that you see, I'd move your stop up just a little bit more to be about, just to make sure you have money.
Right.
You know what I mean?
Yeah.
Covering the spread.
On LMFX, sometimes it won't allow you to get too close. Right?
Yeah, because you cover the spread. But I wouldn't want it to be that close. I wouldn't want it to be necessarily that close.
So is this fine?
Yeah, but actually, yeah, that's fine. So you're going into a secured trade. That's fine. So the journey or the challenge is to trade with a zero take profit. Okay. Mm-hmm. So I want you guys to start learning the skill set. Now, the reason why I want to teach the skill set is because so I'm going to let you teach, and you do it. And I'm not going to talk because I want to see if you learn, but I'm going to explain the psychology behind it. Really quick. It's like, I'm kind of tempted to trade versus teach, but I'm going to go into teaching mode. So every time, like in my learning progression, and I think you guys should do the same thing because it really did help me a ton, was every time I came up against something that I wasn't doing that I wanted to improve upon or that I felt was difficult. When I first started trading, I did not understand how much psychology went into being a good trader, right? And being a consistent trader. Like psychology to me was a huge part of learning how to trade. Mastering my own head, right, was the biggest part of learning how to trade. Because in the beginning, I was searching for a strategy, right? And so maybe you guys have all been there. You guys have all been looking for a strategy. Like at one point, I was playing the Bollinger Bands, right? And I was using that as a strategy. At one point, I was doing Todd's HMA strategy. And then at one point, I was searching YouTube for different strategies and trading, in fact, I caught myself watching a YouTube video yesterday because I'm learning how to trying to improve my YouTube presence. And I caught myself like, oh, this guy's teaching a strategy. And I'm like, oh, what is he doing? And I'm like, oh, I remember when I used to watch YouTube videos for strategies, right? So right here is your action point. Sorry, Patricio, but you don't necessarily, I'm just saying you just need to be cognizant that that's your action point. And right. So in my trading career, you guys can probably appreciate this, is that once I got funded with Apiary and I got into a $10,000 account, every single month I would increase that account, $500,000, whatever that was. But then every single day on the 20th of that month, it would get reset. And I had a hard time with that. So I'd bring the account up to like 11K. And then on the 20th of the month and the 21st, I'd be back to 10. Now, the reason why I had a hard time with that is because I felt psychologically that I just spent 30 days to increase this account. And now I'm back down to where I started. And that was a psychological effect on me. And now I'm at 10K. And the next trade I take could put me below profit, right? And so that was a huge psychological moment in my life, thinking that every single time I would place a trade, for me, if I had $9,995, it was way worse than if I had $10,005 psychologically. Even though it's a $5 loss or a $5 gain, the $5 gain gave me confidence. The $5 loss stole my confidence.
I know what you're talking about.
You know,
Right.
and so
your account balance is a round number. And as soon as you press the first button on the 21st of the month, you have
exactly
99 and 90 cents because you had to pay a spread cost.
Yeah, exactly.
You're panicking because you see nines. And
that was it was taking a huge toll on me, because I felt like if my confidence was lower, then I wasn't trading as much, right? As soon as I was up $5 or $10, I was like, woohoo, now I'm trading with profit. And you just, you're psychologically, your confidence goes up, whatever, right? But then I learned that you know what, I got to fix that psychology, a thought. And so what I did to fix that was I reset my demo account every single day. And so I know some of you guys can't do that. I had the luxury of doing that because I was on the inside of Alveo. But for those of you guys who can't do that and have struggled with that, I would recommend just getting to, a broker or whatever that you can reset a demo account, or with Alveo, you can open up new accounts. Not sure if you can close them, but I'm working with Sean to see if we can't get a reset button for demos. But anyways, I reset it every single day, and I started at 10K in a demo account just to get over that psychological of placing that first trade. So that was my thought process going into it, getting over that psychological issue that I had of placing that first trade. Placing that first trade was really, really difficult for me. And then I grew my confidence to know that, hey, I can find opportunity in placing that first trade. Fast forward to the wobble technique. Now I'm in the wobble technique, learning the wobble technique. Absolutely love the wobble technique. I started noticing that with the wobble technique, this is probably where a lot of you guys are at right now. With the wobble technique, you start putting trades on, and you can get into, you're not getting into one trade. Like before the wobble technique, I was trading 1 to maybe 10 trades max. Like 10 trades was ever my max. And if I was in 10 trades, I was like, oh, this is scary. I'm scared. Right. But now in the wobble technique, I'm 20, 40. I've been as high as 100 before. Right. However, in the wobble technique, if you're not positioned correctly, which a lot of people aren't in the very beginning, you can hit that 5%. You can take a 5% loss pretty quick in a wobble technique because you're so heavy. You have so many trades on, you're maxed out your position. And you run out of bullets, and now you're in the hope and pray, and you find yourself in that position. And I found myself in that position more often in the wobble technique than I ever did trading any other thing. And so I'm like, why am I hitting 5% all the time? Like I would trade 1%, 1%, 1%, 1%, then I'd lose 5%. And it felt like I would do that like almost like one day a week, and everything that I just built was gone because I was only hitting 1%, then I was done trading. 1%, I was done trading. And then a 5% loss, I was done trading, but I gave back every single gain. So I'm sure some of you guys can appreciate that comment because maybe some of you guys are in that same boat. So I had the thought to myself, if I'm losing 5%, I better find a way to where I can make 2%, right? Because if I can make 2%, then I'm okay with losing 5%. Because kind of the rule that I tell everybody is never risk more of one day that you can't make up in 2. So I'm like, how do I make 2% in a wobble technique, right? Using the wobble technique without having to increase my time in the chair. And so I started thinking through that process. And then the other thing that I noticed is that I wasn't taking my losses. So I wasn't peeling my losses off. And that's why I was hitting that 5%. So I was letting my losers run. Because the market has taught me at that point. I was wrong, but the market has taught me that at some point they're going to come back and turn into profit. And that's how I was trading. At some point they're going to come back. So I'm going to let my losers run. And then it dawned on me that by letting my losers run, I'm not only losing out on, and I'm not only losing on those trades and losing money, I'm also losing opportunity. And so when I realized that the opportunity is greater than waiting for the trades to recover, I can make more money on the opportunity than I started understanding I need to pill my losses. Right? But I hated hitting that red X. Every single time I would hit that red X, it meant I was taking a loss. Every single time I hit that red X, it meant I was taking a loss. So now coming full circle of why I'm issuing the challenge of trading with a zero take profit is because if you start hitting that red X or that X over here for profit, it takes away the whole psychology of hitting that X for a loss. Does that make sense? Now, I don't think about hitting that X if I take a loss or if I take a profit, because that psychology of that X has been eliminated from my thought process. I don't think about that X anymore, where that X equals loss subconsciously or consciously. That X to me equals profit now. Whether I'm taking a loss to pill that off for opportunity or I'm taking a money for gain, that X now equals money to me. And because that X equals money to me, it's so much easier to get out of bad trades and flip them or get into better trades or whatever. It has totally given me the confidence that I've needed to be able to peel off my losses and also to peel off the profits. And then there's a side benefit to zero take profit. The side benefit is that you are able to capitalize on a breakout when they happen if you're not, or get lucky. Because if it's trading like this and it breaks to the top and you have your take profit set here and it just shoots up, it's going to hit your take profit. And I noticed that a lot of times it would shoot up past my take profit and then hit that X, that zero take profit X right there where the stall happens. And I was able to not only find a way to get to 2% every single day, but now I was starting to hit 5, 6, 7% on the day because I was trading with a zero take profit. Because I would hit those big runs, and then that's when I discovered the ride the wave, turning a wobble into ride the wave. And because we all know, or as traders, you know that the market moves from periods of expansion to consolidation to expansion. What you don't know is if this next expansion move right here, what you don't know is expansion, consolidation. You don't know if the next expansion is going to be this or this, but this is prime wobble right here. If this is prime wobble, you're wobbling, but you anticipate another expansion move at any moment in time. And it's because you're anticipating another expansion move, you don't know if it's going to be up or down, if it's going to continuation of the trend, or if it's going to reverse on you and go the other way. So that's why you get better at wobbling and you start reading the signal, you start reading price. And that's why, breaking it down, you got your light areas, you got your normal areas, you got your light areas, because it could break on you. You got what what direction are candles facing? What's the pattern is it facing? Is it an M? Is it a W? Is it a head and shoulders? That's when you get all this information in here to help you to determine what way price is going to break, right? But you still don't know. You just play the probabilities. And if you're playing the probabilities and you're right more than you're not, then you're going to catch a ride the wave, and that 1% day is going to turn into a 6% day. And that's exactly what happened to me just the other day. On Tuesday I had a 19% return, or Monday I was a 19% return on a big wick. Then I had a 6% return on Wednesday because I rode the wave, and then I had a 4% in Alveo yesterday, and I think we just did almost 1% yesterday in here, just wobbling. So all we did is wobble, and so I never caught a ride the wave yesterday in the account. So it was like, okay, we're done. Just good wobbling, great wobbling, and I'll take the 1%. But that's what that zero take profit gives you. And so hopefully that makes sense. But the reason why I came to that was purely for psychological. On the other side, it can hurt you dramatically if you do not play the action points. So if you don't know what the action points are and you're trying to do a zero take profit, then it's not going to do you any good. So know where your action points are, combine that with a zero take profit, and then see what happens. But when you're learning, do it in a demo account, because if you say to yourself, if you find yourself saying to yourself in a psychology manner, if you find yourself saying to yourself, well, I'm just going to sit and see if I can get more off of this move, that's the wrong thing. That's the wrong thing. Because I love recycling my trades, and I love 2 to 3xing my trades. And you do not get that opportunity if you're holding on to those when you shouldn't be. So anyways, hopefully that makes sense to you guys. This is the reason why that's a long-winded conversation of why I trade zero take profits, or explanation, I should say, of why I trade zero take profits. But that's the challenge. And I'm going to kind of just give it back to Patricio here and explain. So Patricio, what I'd like you to do is kind of walk us through what you're seeing, what you're looking at, all that kind of stuff. This is going to be very difficult to do. Trust me, trading in front of people in a demo account, but even if it's a demo account or a live account, it's hard to do. But right. But it also increases your skill set a ton for sure. So go ahead and walk us through. I'm going to shut up now and stop talking.
So what I was trying to do here, I don't know if it was going to go up or not. And then on the 5 minute, I don't see any take action points. So I tried to pull some take action points from the past and just place them here to have an idea of what the take action points were going up. And I just placed one here coming down, and I see it trying to consolidate here. So I was trying to wobble here. So that's why I have buys on the bottom part of these candles, which are like 7 pips. Have buys down here and sells up here. And I canceled a couple of sells I was not trying to place. Again, I did the exact same thing that David did earlier. I placed sells instead of buys. But yeah, and that's because me messing with the bottoms, or either with the buttons down here or up here. And so, but that's just practice and stuff like that. So I don't know if it's going to go up or down. Like David said, after consolidation is going to do either. So what I'm trying to do is place my sales, better placement for my sales, better placement for my buys. That's why I canceled the other two, and then just try to be aware of it, maybe making a direction or just pointing on a direction. So what I would do here is, again, I feel that it's really trying to go down more than up. So if I get another chance of it going up here, I'll place another sell up here, not down here, and try and wait here for some kind of real confirmation, maybe down here. So my next action point for me could be these down here, and then if it crosses that and we get confirmation, it could come down here. So that's basically what I'm trying to do. So right now, it's now the bottom of the hour, and so we're waiting to see what this candle does. If it breaks, it might come down. So on a pullback, I would get rid of these buys. So it looks like it's going to close down here, and it's going to that action point. So what I'm trying to not be as eager on the trigger. So these turned yellow. So we'll wait for that. I might get my pullback here to get out of those buys, trying to get them under $10 loss, like David would say. So I'm going to take that one.
Yeah, I would wait just personally.
Mm-hmm.
Just right here, in my opinion, is taking the max loss. And the reason why is, yes, it could come down and break, but it could also pull back at least 50% of that candle. And then that's when I would have taken those losses on the buys, right? And so, and if it does, I would have got out here and then got into the sells. And you're still, I mean, it's not necessarily a $10 loss. It's more of a pip loss. What I mean by that is like your price cycle. It's just when you're taking, I don't want you to take a max loss is what I'm saying. Does that make sense? Anytime you take a loss at an action point, or not necessarily an action point, but the end of a price cycle, you should wait and see if it's going to give you a price cycle or at least 50% of this larger candle and then get out. Does that make sense?
Right. Yeah, I mean, I feel that's another thing I'm still fighting, where I'm like, oh my God, if I stay, it's going to go lower, and I'll never do that. Then it's going to turn into a $20-$40 loss. So yeah, but I see what you're saying. Now, I wasn't about price cycles. Sometimes on this type of setting, for me, it's hard to identify the price cycles because I don't know. I guess you could say this might be one. So that's what
I wouldn't. So when you're measuring price cycles, you kind of see this is just an expansion move here, right? Or this is coming after news events. So I don't really hold that too much value. Right here, when you start getting into consolidation, is what your price cycles are starting to become. They're starting to form them right here.
Okay.
So I kind of ignore this information right there as to price cycle. This information becomes relevant as to action points, but not necessarily price cycles, because this had influence of that news event. Does that make sense?
Okay. So following that, I would say, so these would be a price cycle now.
Yeah.
Compared to here. So that's what, like 16 pips? And then like 18 pips?
Yeah, exactly.
Okay. So if that's what it is, they would have, I mean, I could do it still. But I should have placed the buy down here. So this is the thing. I mean, I'm going to do it because it's a demo. But yeah, so sometimes where you're a little bit late, like right now, would you still place? Because it's what, like, again, like 18 pips. So I'm like maybe in like 5 here. So I still have 13 to go. So I placed it buy, which was late. I should have done it down here.
Right.
If I was, once I identified that price cycle pattern and say,
I'd probably get out of your sell personally and recycle that sell and take the, no, not your buy. You just close out of your buy. I said your sell. But that's okay. And because the reason why I say close out of that sell is because it came up action point stalled. get into another sell, I would have gotten out of your sell. Well, let's just focus on the challenge. I don't want to really correct
everything.
Yeah. Does that make sense? I don't want to trade. So I want to just kind of go back to the challenge of trading with zero take profit. Is everybody doing that? Trading with the zero take profit? Because what I would have saw is that on this breakdown, this action point, this is the place to buy, right? Start buying into this. And then on this action point with the zero take profit, I would have closed out of all of my buys. The reason why I say close out of your sells is because if it breaks above that, that's going to eat into your profit. But if it comes back down, you could get back in and into a sell, right? But it's better to take the profit and then wait and see what it does. That's why I was saying get out of the sell. Does that make sense? Because if it does break higher, you're going to lose all that profit. And so, and that's the problem with trading a zero take profit, is because you waited, you had a sell up here. And I don't know, I mean, I'm going to ask the question, why, when your sell came down to here and it came down and stalled, why didn't you take the profit there?
Just because I guess I missed it talking and trading, but yeah,
sure.
but of course that's
solving.
But I mean, but that's, yeah, I can see what you're saying, because if we were trading with a take profit, that would have been automatic, but we would have left money on the table.
Sure.
So
which you did because you let it run all the way back up, and that's that is the definition of why trading with the zero take profit can be dangerous. Right? Because of what Nick just said, I expected it to go lower. You don't, when you trade with the zero take profit, you don't, and not to call you out, Nick, but I'm going to call you out. Just kidding. No, not to call you out, but you trade the action points, right? And so if the action point comes down and stalls or shows you a reversal right here, you get out. That's what you do when you're trading zero take profit. You get out, whether that is 5 pips of profit, 2 pips of profit, or a break even. You just get out, right? And that's what you do. And if you tell yourself, I thought it would go lower, that's putting yourself into a position of not putting money in the bank and having it ride all the way back up like it's doing right here. And if you were still in that sell, you would have lost the opportunity to make money on the sell. Does that make sense?
Yeah, so even lose money because of the spread.
Yes, correct. Right. And so that's why it's so important that we teach ourselves to hit that red X on the action points. And so this is a great challenge, because we've just seen what you need to learn, and then also by taking advantage of it, because obviously we were able to ride the wave on a couple of those without having to take profit. So this has been a great challenge in showing us the do's and don'ts of trading with a zero take profit.
Right. Yeah. It's. I mean, we really need to get used to it, because we've been trading algo for so long with the 2 pip take profit. You sort of like forget that.
Yes. And I'm not telling you guys to get away from that. I'm telling you to add this. This is a challenge. This is why it's called challenge, right? And it's to kind of get better at that. If you need it for psychological reasons, like for me, I did, right? I'm not, if you're trading with a zero take profit, please don't do so because you want to make more money, or you're doing it for greed. The reason why I did it is to get myself comfortable with taking losses. That was the benefit for me, right? Because I struggled with just peeling off my losses. And so I hated hitting that red X. And that was honestly the reason why I started trading with zero take profit, is because I'm like, I need to start hitting that red X for good things, not just for bad things. So Nick asked the question, so even if in fix-it mode, will we wobble to close our sales and profit at the action point? Absolutely. You know, if this is the third test of the high, are you saying that this is the third test? Because I wasn't noticing that because I was talking forever. So, I mean, I don't know if it's a third test. It's because this is kind of one test, right? Came up, tested, retreated. So this could be this. This is the second test right here. I don't consider wicks to be a test, really. So if you're counting this as the second test, it's usually on the bodies that you get that test. Are you selling here? Yes, you are.
Yes.
Okay. All right. So now we're coming into an action point here.
I don't see your drawings. Are you drawing?
No, I'm just saying, like, we got this stall on this candle. So
go ahead. Take it.
Yeah, I mean, I hate telling you what to do.
No. But,
I want you to. I want you to recognize these without me having to recognize it. That makes sense.
Right. I'll execute it, and you correct me afterwards.
All right, sounds good. That's perfect.
Okay.
So I'm just going to go back, and while you're trading here, I'm going to go back and unpack what Nick's comment was. So even in fix-it mode, we wobble to close ourselves and profit at the action point. Absolutely, you do. If your action point is telling you to do that, right? And so even if you are in fixing, if you have a layer up here, let's say you have a layer up here of buys, right? And it came down, and now you got to fix those buys. And the market is doing this, and you think it's going to come back and touch those buys. The challenge, the thing is that the market never trades like this, never just trades like that, right? What the market tends to do, and this is where you kind of get into a skill set of knowing, right? Is this trend is uptrend or is downtrend? And if in kind of what we kind of going back to what we talked about yesterday, is it easier to make money going up or is it easier to make money going down, right? What kind of market conditions you're in at the moment. If you're in buys, but the market is just, easier going down, then absolutely, if it pops up, you take your profit here on this action point, and then it goes back down, you get back in for another pop, because the market never just goes straight back up. And so you look to recycle and you 2x your money there. And again, same rule applies. Every time it touches that point, it's more likely going to break. And so at some point, you're going to have a layer on where it does break past it, and then you ride that layer of trades up to the top. But if your action point says, I'm stalling here, I'm going to come back, then you take your profit and you get right back in for another test, right? And so sometimes you can 2 to 3x your trades. Now, that's hard to do. It's really hard to do, especially if the market's moving really quickly. But I try to do that, right? And you guys have seen me like, oh, I missed the opportunity there. I missed the opportunity there. But I'm recognizing that was the opportunity. And that's the first goal, is to recognize the opportunity. The second goal is to get better at execution. I'm so much better at executing on that when I'm not teaching, right? When I'm not focused on 2 different things and I can focus on just clicking the mouse. I'm so much better at taking at 2 and recycling my trades. So, and that's what I do. And you guys are getting, you guys are helping me, or I'm helping you, or whatever. But this is kind of what my lesson is in boot camp today. So I'm going a lot more detail into that. So I'm giving you guys a little bit of what I've been thinking about to teach the boot camp people. So congratulations, get a free boot camp lesson. But we go into a lot more detail.
on this situation right now, I always have the doubt. Like, okay, so if it goes up for a third test, it might break. So am I early for a ballet trade? Because we're on the other side, there's open range, or how you call it, where you have no real knowledge of where it's going. So
I wouldn't take a belay trade. Personally, I'd only do that if you're thinking it's coming down and you get into a buy. So the only time I take a belay trade is if the market is going to go past where I don't have any data over here. Does that make sense? Right. Yes, if it runs down. Yes, if it breaks lower here. If it breaks lower here, it could run because you don't really have a whole ton of action points, but we're not into news. Again, going back, this is a news move. So because we're not in a move, the likelihood of it giving you 100% retracement in, 1, 2, 3, 4, 5, and 30, 30 minutes is not, you're not going to get 100% retracement in 30 minutes. You know what I mean?
Right.
And so if it does move down, it's going to move down slower, and you still, you could turn this into a fib move if it starts to look like that. But so I wouldn't put a belay trade on, because that's only in case you do get a breakout. And if it does break out to the bottom, I don't anticipate it running a ton. Does that make sense?
So, yeah, but how about if it breaks out to the top?
Well, you already have a layer of trades on to capitalize on that. So the other thing that you're looking at right here is two things. One, if it comes down and breaks this right here, it could form into an M. Right. If it fails to break right here, then most likely it's going to run and break the top.
Right.
So those are the two plays that I could see happening. Where it comes down, breaks, it could run down all the way to this action point. But if it fails to break, or if this candle moves higher than this candle, you could see it break to the top. Right. Right. And so that's going back to having a plan A and a plan B. Right. And so on my plan A is like, we're going to move higher, but plan B says if it fails to break here, it's probably going to come and test the bottom. So if it fails to break this line, I'd probably jump into some sells for a run down to the bottom of that. Right.
Okay.
And that's kind of the way I'm looking at it. That's the way I'm looking at it.
A little bit early, maybe. Okay, so now I have, okay.
So now you're kind of into a buy and a sell situation. So once it crosses this and gives you confirmation that it is in fact going lower, that's still not a place to get out of your buys, because you'll make money on your sells. So if it does break and it breaks lower, you'll make money on the sells right here. And then on the stall, this is where you would get out for money. And then you would buy back in for it to come and touch this point right here. And then that's when you would exit out of this layer and your profit layer on your buys here. And that's how I would trade that, right? Does that make sense?
Right. Now, you wouldn't place more buys here for the...
I wouldn't, only because of this M that's forming. Like I said, if it does cross, it could run down, right?
Right.
But if it fails to cross, if I had meat on the bone for my sells, I would maybe take them, just because the action point is saying that it's going to come up and they could get back in. But if you don't have any profit, then I wouldn't take them. I'm only saying if I had profit right there, I would take them and then get back in. But because for me, I wouldn't have took your sells until I'm almost thinking that I would close out on my buys, because it's failing to break It's failing to break that 50%.
Mhm.
So to me, it's giving me all the indication that it's going to break to the lower side on a test. Right now, it could come back up and then break in. And if it does that, that gives you an opportunity to get out of this layer if it fails to cross that. So what you're doing right this second is what I talked about earlier. And I don't mean to pick on you. This is not the place you want to put sells. What you're doing is you're chasing the market in your mind because you're like, oh, Dave thinks it's going to break, so I better be into some sells.
Right.
But it hasn't. And so you don't want to get into sells until you get confirmation of the break, right? For me, again, going back to this is just not a good place to put sells on, because if it bounces here and it decides to go up, this is a layer that's hard to fix. So I would rather, even right here would have been the better place to get out of sells and to get out of your buys and to get into sells on this point. Do you see that?
Up there? Yeah, up there.
Right here on this wick, you could have closed out of your buys. And if you weren't, obviously there's a wick, and I don't know how long it stayed on that wick, but it was a wick and it stalled. That tells me, it would have told me to get out of my buys because it's probably going to come back down. And then it came back up again. And if you got out of your buys there, you could have got into sells here, and that would have been a better placement. So by putting sells right here on an action point at the end of a price cycle, you kind of did what I tell people not to do ever, is never place a trade in the same direction at the end of a price cycle.
Yeah.
Right. But now that you did, if I'm not here to tell you that that was wrong, the market's telling you that you were correct. And sometimes that's the worst teacher. Sometimes the market can be the worst teacher because you made a bad move from a fundamental analysis, but the market reinforced that bad behavior by giving you profits. Does that make sense?
Yeah, no, absolutely. That now going back to the where.
So hold on 1 second. You're in a zero take profit trade on these sells, so you need to manage that. You can't just let it run. This is not a ride the wave situation. This is an action point situation. Does that make sense? So
right.
Again, going back to what I was talking about, if you don't pull the trigger on this, you could miss your opportunities to fix your buys, right? And so I would be looking to start buying in right here. And as it moves lower, I'd probably buy all the way down to here and kind of put into what we practiced yesterday about setting up for the turn. At some point it's going to turn, so we need to set our trades up for the turn. And so I'd probably, if it pops down again, put another one, continue to buy and put a layer stack on here. And again, love the break-even line. I'd love to try to get this break-even line to be under here. So if you put one more buy on, that break-even line would come down, I'm pretty sure. Don't do it on a green. If you can do it on a blue, that would be better. Does that make sense? Is all this making sense to you, Patricio?
No, it makes sense. I was going to say that when I place those cells late, it's because you get this feeling of fear of missing out, which is stupid. But so you want to be in there. But I can see what you're saying. In the risk reward situation, it's too risky. So you better miss out than.
I would rather miss out on the opportunity, find another opportunity than put trades on. And the only time that I would take that is if it was the third attempt of a break to a ride the wave, then the risk reward is worth it. Does that make sense? That's the only exception to that rule of never place a trade at the end of a price cycle, is when it's a third attempt of a breakout and you can turn it into a ride the wave situation. That's the only exception in my mind to never placing a trade at the end of a price cycle in the same direction.
Can I ask something, David?
Yeah.
Why you start buying here? Why do you expect the turn?
Why did I start to buy right here?
Yeah, buying.
These are like yesterday. Were you with us yesterday? Because that was our challenge yesterday. Was
so
getting in early, start buying in early to the turn, right? We're not buying heavy. This is, light, but we're waiting for that turn. So this is a good action point for that turn. Good action point for the turn all the way down to here, waiting for that turn, because again, got a price cycle up, 2 price cycles down. The more that it goes down, the more likely it's going to price cycle back up. And again, we need to be into buys to fix this layer. And the more, I'm not saying the more buys we can put on, the better, because you don't want to go heavy still until you get confirmation of the turn. Once you get confirmation of that turn, then you can start to build in. So we're getting in early, anticipating the turn. And sometimes, like yesterday, if you're in early, this turn could come, but then you could get a candle that goes like this. And that's a big candle on the turn. And then you miss your opportunity to buy into the confirmation, right? And so that's why getting in early helps you to at least make money if it does do that.
my point though is, I know here we have an action point down here,
right?
and
Kind of
when
on one
it's
right now.
early, when it's considered to begin buying into it, knowing that it's going to come down here and expect it to bounce.
Right.
So after it passes this, what do you call this? This index for the M or the
right here, this little formation right here.
Yeah. After this, then you'd start buying, expecting the turn.
I wait for confirmation. So confirmation comes when the body closes above that, right? So as soon as the body,
you have very little meat on the bone from there to the next action point going up, right?
I don't know. This would be from here. Oh, you're talking right here? Yeah. I was thinking right here. You should have good size from here to there, right?
Yeah. I mean, these candles are so deceiving.
It's because you're seeing this stuff in your chart. If you zoomed in and got rid of this, the candles would be a lot bigger. But sometimes it's just difficult you double click on that. Just double click on your. Yeah, I tend not to mess with that scaling so that it's always the same for me. So I get used to a certain view. When you change your view, and you can really mess you up on the size of the candles and thinking exactly what you thought, like, oh, there's not enough meat on the bone, or there is, or whatever. So I tend not to touch that. I always just leave it alone. And then get used to seeing it the same way every day.
But you do want to be able to see your action points here, right?
Sure, but you could also see them over here.
I mean, if you're too close,
the action points are stronger on the 5 minute than they are on the 1.
Okay. Oh, that's what. Yeah. Okay. So that's what you're saying. See it over here. Okay.
Right.
Now, when it starts getting down here, don't you correct? Because I feel like I'm gonna miss it. But I tend not to watch very much the 5 minute. But yeah, of course. Yeah. Okay. So you're actually watching this here. Okay, so this is where we start panicking as far as should we change our bias. Maybe we need to get to 50% retracement of this thing here.
I'm looking at like what. So the thing that I would do, now this is a demo account. I would not be trading with a 0.10. I didn't correct you on that because we were in some good wobble stuff. If I'm in some good wobble stuff, I'll go a little heavier. But also these price cycles are huge, 20, 30 pips. So you should be trading with 0.05s so that, these 25 losses are now, 7 to 10 instead of 15 instead of 30, right?
Right.
Only because our price cycles are so big. But now that you're in on 10, you do need to stay at 10 because
Yeah,
you're not going to be able to fix what you have up here unless you have the same position size, right? But I don't think we're into panic mode at all, because in my mind, we've gotten this huge price cycle down without a price cycle up. So whenever I see that, I start thinking it's got to turn at any moment. It's got to turn at any moment. Got to turn at any moment. The probability of getting a price cycle up is much greater than getting another one coming down, right? And so I'd start, buying into the price cycle up, making sure that that break-even line comes down below this action point. I would put one more buy on if you can. So that so your break-even line comes to this point. And if it comes up here and stalls, then you get out of everything for break-even. Do you know what I mean?
Right.
And then, but you watch and see, this is why, you trade with a zero take profit, is you watch and see. And if it bypasses this action point, well, now you're in the profit. The other thing you could do as well, and I would do, if we were only 2 price cycles deep, is if it fails to break this, you could get into some sells really quick, like a heavy position of sells for a run down here and to test the lows one more time. So that's a level 3 technique where you're taking quick opportunities. And again, don't do it if the action point comes up here and it doesn't stall. Right. Because it could give you this confirmation of the break and we could be in a price cycle. Right. So there's a lot of different things that you could do. So like right now, I wouldn't have done that because the body is above that. Right. And so if it holds, which we're kind of early on the candle, so I don't know if it will, but if it fails to break above this, then I would jump into a heavy layer of sales for a quick profit. Not riding them, right?
But
so
again, go ahead.
This should be our confirmation of a price cycle higher, right? Now because you did that, because you put more trades on and brought your break even line to here, now you have a decision to make. Do I want to just get out and break even on my trades, or do I want to be profitable? Now, in this channel right here, you could take your break even, just depending on this action point right here. Again, wait and see if is it going to stall, or you're closing your shorts. You want to close longs. So you're going to press the button and wonder why it doesn't work.
Right.
So again, action point here, is it stalling or is it going to break past? And first, like we talk about, first you trade to break even, then you go for profit, right? And so if you feel like it's going to stall and not pass this, then I would take it, but then you got to get into maybe some shorts here. But if it breaks it, it could price cycle all the way back up to this point and give you profit. And so this is kind of the what do I do situation, and you're waiting for confirmation. And that's the best thing to do, is you never really got a true stall because the candle was going like this. It was kind of flickering. And so you did get that confirmation that it is going to trade. Now, the same thing here applies. We just price cycled up once. The likelihood of getting a second price cycle is not as high. And so to get your profit, you're going to want to maybe look on this action point or this action point, same thing. And I would love it. You would want to time it, maybe take your profit here and then look to get back in. But like I said, look, that action point, well, I was just explaining that you didn't get a stall. It went right past the action point. So that's a good thing to hold your trades, right? But you got a little scared that you were going to lose your profit. And so you closed out everything. right? And so just as I was saying that's the action point that you want to read, you always want to rely on those action points, right?
Right.
Because this is your next action point. And that's exactly what you do. You know, you can make money on the down, make money on the up, right? And so that's what we did.
Okay.
All right. Anybody else? Real fast as a recap, as we're up against the clock. Anybody else? Trade, zero, take profit. How did you guys do? Patricia, if you don't mind, stop sharing your screen here for a second.
Sure. Yeah, just let me ask you real quickly. What does this flickering red and blue thing means?
Just this going in that direction. So blue is going down. When it's blue, I guess when it's blue, it's going up, and when it's red, it's the price is going down. Right.
Okay.
Anyways, Cliff, what were you saying?
I said I made 78 pips from that.
Awesome.
Buying as it coming down.